You're not afraid of retirement. What you're really afraid of is this. One day after you've stopped working, the system keeps taking from you as if you never did. Before we dive into the 10 states that actually protect your retirement savings, make sure to hit that subscribe button for Tax Hack Pro. We break down the tax laws and financial strategies that help you keep more of what you earned. You paid taxes your entire life. You bought a home to live in for the rest of your years. You lived carefully, not extravagantly. And then year after year, the property tax bill shows up a little higher each time. No noise, no warning, just a number big enough to make you start asking yourself, if this keeps going, how long can I really hold on? That is why 2026 has become a dangerous turning point for so many retirees. New tax laws, especially around property taxes, are starting to reveal their real impact. This video isn't about which states are beautiful or nice to live in. It is about the 10 states that actually help you hold on to the life you've already built when you compare all taxes, not just income taxes. Number 1. Florida. If you are already retired and living on Social Security, plus monthly retirement withdrawals, have you ever stopped to wonder what happens when your property taxes quietly keep going up while your income doesn't? That is not a distant worry. For many older Americans, it is a real pressure that shows up silently, one tax bill at a time, year after year. And that is why Florida so often comes up first when people talk about states that feel easier to breathe in after recent tax changes. Florida isn't trying to make everything cheap. What it does is simple. It doesn't take more from people who have already stopped working. There is no state income tax. Social Security isn't taxed. Withdrawals from pensions, 401ks, or IRAs aren't hit with an extra layer of state tax either. For someone still working, that might just sound like a line in the tax code. But once you're retired, it determines whether the money you pull out is truly yours to use. When your income is fixed, stability becomes the most valuable thing you have. In many other states, retirees still have to give up part of their retirement income to state taxes, slowly throwing their plans off balance. In Florida, what you withdraw is largely what you keep. It doesn't make life luxurious, but it means you don't have to keep recalculating, worrying, or cutting back every single year. There is another concern people don't talk about much. What happens to what you leave behind? You don't have to be wealthy to want the savings and home you worked for to be passed on intact without losing another chunk to taxes after you are gone. Florida doesn't have a state-to-state tax or inheritance tax. And for many families, that alone brings a sense of relief. All of this adds up to a very different experience of retirement. When your income isn't being taxed at the state level, you have more room to handle the unavoidable costs like homeowners insurance, healthcare, and everyday living. You are not constantly chasing rising expenses or worrying that next year will be worse than the last. Beyond taxes, Florida fits older adults in practical, everyday ways. The housing market offers a wide range of options, from 55-plus communities designed for easier living to quiet neighborhoods with predictable costs. Many local areas offer housing support programs for people on fixed incomes, helping ease rent or maintenance pressures. Healthcare is widely available, and at this stage of life, not having to travel far to see a doctor matters more than almost anything else. Florida isn't chosen because it is a fantasy. It is chosen because it feels safe. Safe from being squeezed by the tax system just because you are retired. Safe from having your plans thrown off by sudden, unpredictable changes. For many older adults, Florida is simply a place where life slows down, breathing feels easier, and the later years aren't overshadowed by a quiet but constant worry about taxes creeping higher every year. Number 2, Wyoming. Wyoming doesn't sell itself with palm trees or ocean views. It doesn't promise an exciting retirement or a glamorous second act. What it offers is something far quieter, and for many retirees, far more valuable. Control over taxes, control over expenses, and most importantly, control over how long your retirement savings can actually last. If Florida feels like relief, Wyoming feels like silence after the noise finally stops. No state income tax, no taxes on Social Security, no taxes on pensions, 401ks, or IRAs, no estate or inheritance tax waiting at the end. For someone living on a fixed income, this isn't just a friendly tax environment. It is a system that largely stays out of your way. The real difference shows up when you look at property taxes. In many states, retirees discover too late that even if their income isn't taxed heavily, their home becomes the pressure point. Rising assessments, rising bills, no realistic way to push back. Wyoming is different. Property taxes are generally lower and, more importantly, predictable. The kind of predictable that lets you plan years ahead without constantly bracing for the next increase. That predictability changes how retirement feels on a daily basis. Instead of checking the mailbox with a knot in your stomach, you start thinking in longer stretches of time. You can map out your expenses. You can decide when to travel, when to help your family, when to slow down spending without worrying that one tax hike will undo everything. Wyoming fits retirees who don't need a lot but need what they have to last. If your income comes from Social Security and steady retirement withdrawals, Wyoming doesn't take a slice just because the calendar turned another year. What you bring in stays yours. That alone removes a constant background stress many retirees don't even realize they're carrying. There's also a psychological shift that happens here. In bigger, faster-growing states, retirees often feel like they are being pushed out by rising costs meant for younger, higher earners. Wyoming doesn't chase growth at that pace. Communities are smaller, change happens slowly, and that slower rhythm matches the stage of life many retirees are in. You are not competing, you are settling. Housing costs tend to reflect that pace as well. Homes are generally more affordable, property taxes easier to absorb, and there is less pressure to keep up. For retirees who own their homes outright or are close to it, Wyoming can feel like stepping off a treadmill that never really stopped elsewhere. Healthcare access isn't as dense as in large states, and that is an honest trade-off, but many retirees who choose Wyoming do so with clear eyes. They value calm over convenience, space over stimulation, and financial stability over amenities they rarely use. For them, fewer choices often mean fewer costs, fewer surprises, and fewer decisions they didn't ask to make. Wyoming is often described as Florida's quieter, lower-cost counterpart, and that comparison fits. It offers the same core tax advantages without the crowds, without the constant churn, and without the sense that retirement has become a business model aimed at extracting as much as possible from aging residents. This is not a place people stumble into by accident. It is a place people choose after realizing that retirement isn't about chasing the best deal, but about avoiding the worst mistakes. Wyoming doesn't promise excitement. It promises something steadier, a retirement where the math keeps working, the rules don't keep changing, and the money you plan to live on actually stays with you. If you are concerned about making sure your retirement income lasts as long as you do, subscribe to Tax Hack Pro. We track the numbers so you can protect your financial future. Number 3, Nevada. Are you willing to pay a little more every time you step outside and spend money just so your retirement income stays untouched? For many retirees, that is the trade-off Nevada puts on the table right from the start. No sugarcoating, no fine print. Nevada is one of the first states that catch retirees' attention for a very simple reason. There is no state income tax. Social Security isn't taxed. Withdrawals from pensions, 401ks, or IRAs aren't taxed at the state level either. And once you are living on a fixed income, that matters more than almost anything else. At the very least, the money you are counting on each month actually arrives intact. But Nevada doesn't give you everything for free. The cost shows up in sales tax. Every grocery run, every tank of gas, every meal out, every everyday purchase quietly takes a little more out of your pocket. It is not shocking overnight, but over time it forces you to notice. If you want things to stay manageable, your lifestyle has to adjust. For retirees, that difference is crucial. If you tend to spend freely, eat out often, or don't keep a close eye on small, everyday expenses, Nevada can make your money feel like it is slipping away faster than expected. But if you live simply, spend with intention, and focus on making your retirement savings last, not taxing your retirement income becomes a real advantage. There is another detail older homeowners pay close attention to. Property taxes don't spiral out of control. Nevada uses caps that limit how much property taxes can increase from year to year, helping homeowners avoid sudden jumps when home values rise. For retirees, that means tax bills that feel less jarring, more predictable, and easier to plan around long-term. Living in Nevada creates a very specific rhythm. Your retirement income isn't being touched by the tax system, but you also can't live on autopilot anymore. Every spending decision carries a bit more weight. For many people, that doesn't feel like pressure. It feels like clarity. A necessary shift when life moves into a different chapter. Beyond taxes, Nevada has other qualities retirees consider. Housing costs, especially outside the most crowded areas, remain relatively accessible. The dry climate works well for many older adults. Healthcare is concentrated in major cities, making access manageable if you choose your location carefully. Nevada isn't the state for people who want to spend freely without thinking. But for those who know their priority is stretching retirement income as far as possible, it becomes a very clear option. Nevada's tax system sends a straightforward message. We won't touch the money you earned in the past, but day-to-day living requires awareness. Number 4, South Dakota. If you are retired, what really wears you down more? living in a place full of things to spend money on, or living somewhere you don't have to stay on financial defense every single day? South Dakota enters the retirement conversation with that exact question. It doesn't try to impress. It doesn't try to sell excitement. It speaks directly to people who are done chasing growth and are ready for life to stay in its lane. South Dakota has no state income tax. Social Security isn't taxed. Withdrawals from pensions, 401ks, or IRAs aren't taxed either. That may sound familiar by now, but here is the real question. What does that actually mean? Once your income is fixed, it means when you pull money out to live on, you don't have to split it with the state. You don't have to withdraw less just to avoid taxes. The money you plan to live on goes straight into your life, not through another layer of taxation. What really gets retirees' attention, though, is that South Dakota has very few hidden tax traps. It isn't one of those states where income taxes are low on paper, but you get hit from every other angle. Property taxes aren't the lowest in the country, but they are stable, predictable, and paired with relief programs for qualifying older homeowners. And that leads to an important question. Would you rather live in a place with low taxes on paper or somewhere you can actually predict what next year's bill will look like? For retirees, predictability matters almost as much as the tax rate itself. You don't need the cheapest place in America. You need to know that next year won't suddenly blow up your budget. In South Dakota, that kind of financial whiplash is rare. You are not constantly reacting to new rules, new fees, or changes that force you to rewrite your plans. South Dakota also quietly forces a more personal question. How much do you really need to live well? There is no pressure to spend, no lifestyle pushing you to keep up. Housing remains affordable for many retirees. The cost of living is manageable. The slower pace means money doesn't leak out without you noticing. For a lot of people, it is the first time in years their money actually feels like it is staying put. This state fits people who value simplicity, fewer policy changes, fewer surprises, fewer financial decisions made under pressure. In retirement, that kind of freedom isn't about spending more. It is about not having to stay on guard all the time. South Dakota isn't for people chasing excitement. It is for people asking themselves a very honest question. If I live another 20 years, do I want those years to feel stable or quietly stressful? For those who choose stability, fewer moving parts, and a life that doesn't constantly demand financial vigilance, South Dakota becomes the answer without ever having to shout. Number 5, Mississippi. If you already own your home or you are close to paying it off, what matters more in retirement? Whether your state has an income tax or how much you have to pay every single year just to keep that house. Mississippi enters the retirement picture with that very practical question, and for many older adults, the answer becomes clear pretty quickly. Mississippi does have a state income tax and it doesn't pretend otherwise, but here is what matters. It doesn't tax the income retirees actually live on. Social Security isn't taxed. Withdrawals from pensions, 401ks, and IRAs aren't taxed either. That creates a clear line. The state collects taxes, but it doesn't go after retirement income. For someone who is already retired, that difference is huge. You can live with a modest income tax if the money you are pulling from your retirement account stays intact. You don't have to withdraw less just to avoid taxes. You don't have to worry that every extra dollar you need for living expenses will get clipped by the state. Your retirement income does what it is supposed to do. Support your life now, not get chipped away year after year. Where Mississippi really stands out for a very specific group of retirees is low property taxes. For homeowners, this isn't a small detail. Lower property taxes mean your fixed yearly costs stay manageable. You are not constantly bracing for bigger bills just because home values are rising elsewhere. And once you own your home outright or bought it with savings, Mississippi becomes a place where your house feels like a home, not a financial burden. Mississippi isn't built for heavy spending. But if you live simply, watch your expenses, and value stability, it offers something different. The overall cost of living is lower. Housing is accessible. The slower pace makes it easier to keep money from slipping away without noticing. Mississippi fits retirees who are past the stage of chasing convenience and are asking a more honest question. How much do I really need to live comfortably? For homeowners living on retirement income who don't want rising property taxes to quietly upend their plans, Mississippi becomes a quiet but sensible choice heading into 2026. Number 6, Georgia. Not everyone retires looking for the cheapest place possible. Many people are simply looking for a place where taxes don't feel like an enemy, but everyday life still feels complete. Georgia makes this list because of that balance, a balance that becomes surprisingly hard to find once your income is fixed. Georgia does have a state income tax, and that alone makes some people hesitate. But that is not the whole story. The state does not tax Social Security, and for retirees, that matters more than almost anything else. Social Security isn't just another check, it is the foundation of most retirement plans. When that foundation isn't touched, the financial pressure eases in a very real way. On top of that, Georgia offers tax relief programs specifically for older adults, especially at the local level through property tax exemptions. For many qualifying homeowners, part of a home's value or even school taxes can be reduced. That creates a very different experience from states where retirees are taxed the same way as people still in their prime earning years. Taxes don't disappear, but they feel softer, more reasonable, and better aligned with a senior's financial reality. For retirees, the difference isn't about hitting the lowest possible number. It is about how it feels to live there. It is the sense that the system isn't taking from the money you rely on most and isn't treating you like someone who is still expected to earn more every year. Georgia gives retirees a buffer. Enough breathing room so they don't have to constantly rework their plans just to keep up. Georgia also appeals to people who want more than just tax advantages. The climate is milder than many northern states. Healthcare is well developed in major cities and surrounding areas, and if you choose the right location, the cost of living remains manageable. You can live comfortably without giving up the services and conveniences that matter at this stage of life. Number 7, Tennessee. When you're retired, where do you want your money to disappear? Slowly through income taxes, or little by little every time you go shopping? Tennessee doesn't dodge that question. It puts the trade-off right on the table. And that honesty is exactly why so many retirees stop and take a serious look. Tennessee has no state income tax. Social Security isn't taxed. Withdrawals from pensions, 401ks, and IRAs aren't taxed either. For retirees, that creates an immediate sense of relief. The money you rely on each month doesn't get sliced up before it ever reaches you. You are withdrawing to live, not to feed another layer of taxes. But Tennessee isn't a free ride. The cost shows up in high sales taxes. Every grocery trip, every meal out, every everyday purchase takes a little extra. It doesn't feel dramatic at first. But if you shop often, eat out a lot, or don't pay attention to small expenses, the money can slip away faster than expected. Where Tennessee really shines is property taxes. For homeowners, they are relatively low. And once your income is fixed, that matters a lot. Lower property taxes mean your biggest recurring bill stays manageable. You are not constantly bracing for a sudden jump that could throw your entire budget off balance. That is why Tennessee works best for a very specific type of retiree. Someone who owns a home or plans to settle into one, and who is comfortable keeping day-to-day spending under control. If you live simply, avoid impulse spending, and focus on long-term stability, the lack of income taxes and low property taxes can outweigh the sting of higher sales taxes. Beyond taxes, Tennessee offers practical advantages. The cost of living is generally reasonable. The climate is mild compared to many northern states. Mid-sized cities provide solid health care and everyday services without the price tag of major metro areas. If you're looking for more ways to keep your retirement income safe from hidden costs, make sure to subscribe to Tax Hack Pro. We are here to help you navigate the financial maze of retirement. Number 8, Texas. Texas sounds incredibly appealing for retirees right up until you look closely at your annual property tax bill. The state has no income tax. Social Security isn't taxed. Withdrawals from pensions, 401ks, and IRAs aren't taxed either. On paper, Texas looks like a tax haven for retirees, but the real-life experience depends heavily on whether you own a home and where that home is located. The biggest challenge in Texas is high property taxes in many areas. Once you are retired and living on a fixed income, property taxes become the most intimidating expense. In some parts of Texas, annual property tax bills are so high that they wipe out much of the benefit of having no income tax at all. That is why many retirees in Texas aren't worried about income taxes. They are worried about whether they will still be able to afford their home 10 or 15 years down the road. Texas does have its bright spots. For renters or for homeowners who choose the right areas and qualify for homestead exemptions and senior tax relief, the pressure can ease significantly. The cost of living in many mid-sized cities remains manageable. Healthcare is widely available, services are strong, and the warm climate continues to attract retirees. Texas isn't a guaranteed safe choice for everyone. But for those who plan carefully, choose their location wisely, and truly understand the weight of property taxes, Texas can still protect retirement income as long as property taxes don't end up running your life. Number 9. New Hampshire. Do you want everyday shopping to feel lighter, or are you willing to live with a high property tax bill in exchange for that? New Hampshire forces retirees to face that question head-on. The state doesn't tax earned income and has no sales tax, so day-to-day spending feels noticeably easier. Groceries, prescriptions, meals out. There is no extra tax quietly tagging along with every purchase like in many other states. But that relief comes at a real cost, very high property taxes. For homeowners, this can reshape an entire retirement plan. When your income is fixed, a high property tax bill that rises steadily over time creates pressure that doesn't shout, but it never goes away. Many retirees in New Hampshire aren't worried about small purchases. They are worried about how much it costs each year just to keep their home. Because of that, New Hampshire works best for a very specific group. Renters or homeowners with lower-priced homes that are already paid off who can tolerate higher property taxes in exchange for cheaper everyday living. For them, the lack of sales tax helps money stay in their pocket longer and makes monthly expenses easier to manage. New Hampshire isn't a safe choice for every retiree, but for those who value low daily costs, live simply, and are comfortable making the trade-off with property taxes, it offers a very different kind of balance. The key is being honest with yourself about whether that trade-off is something you can live with long-term. Number 10, Alaska. If taxes are no longer the problem, then what actually limits your retirement? Alaska forces you to think about that question in a very direct way. On the tax side, almost everything is stripped down to the minimum, but in exchange, everyday life asks for a level of readiness not everyone wants. Alaska has no state income tax and no statewide sales tax. That alone changes how retirement income feels. When your Social Security and retirement withdrawals hit your account, there isn't a state tax waiting to take a cut. For many retirees, that creates a rare sense of clarity. What you receive is largely what you keep. But Alaska doesn't end the conversation there. Local taxes can vary by area, and more importantly, the cost of living is high. Groceries, services, repairs, everything tends to cost more. When your income is fixed, you may feel free from state taxes, but each dollar you spend carries more weight. The pressure shifts from taxation to daily expenses. That is why Alaska clearly separates who it works for and who it doesn't. It is not ideal for retirees who rely heavily on frequent medical care or need services close by. Distance, weather, and limited access can turn into real challenges. But for retirees who are still healthy, largely independent, and focused on keeping taxes as low as possible, Alaska offers a different kind of freedom. Alaska isn't trying to appeal to everyone. It makes a straightforward offer. The state won't take much from you as long as you are prepared to take care of yourself. For some retirees, that honesty is exactly what makes Alaska worth considering. Conclusion: when you line all of these states up side by side, one thing becomes clear. Retirement is no longer about finding the cheapest place to live. It is about finding the place with the least risk for the years you have left. Income taxes, property taxes, sales taxes, senior exemptions. When you put it all together, that is what determines whether retirement feels calm or quietly stressful. If this video helped you take a second look at where you live now, or pushed you to ask the right questions before it is too late, then it has done its job. And if you want to keep understanding the changes that directly affect retirees in the US, hit like and subscribe to Tax Hack Pro so you don't miss the insights that can help you hold on to the life you have spent a lifetime building. I'm the Tax Hack Pro. Protect your savings, protect your future, and I'll see you in the next video.